This fund invests in corporate bonds. We've been investing in other things like green gilts, mainly ethical investments. An investment process is a truly active fund. We like to take ideas from the real world and convert them into ways of beating our peers. We have an ethical screen. We're very much conscious on valuation, but also valuation where we've got some good assets. So it's a combination of good ideas, good companies that are cheap, that are ethical. The two main risks for this fund are your credit risk, and we obviously manage that through exposures to corporate bonds and financials in different parts of the capital structures, but also interest rate sensitivity. Obviously, if yields fall, your prices go up, but if yields rise, your prices go down. So you're obviously conscious of credit risk and interest rate sensitivity. We integrate ESG in two ways into this fund. The primary way is through the negative and positive screen, where we exclude companies which sort of damage to the environment or an impact on gambling or alcohol. There's a full list of those. But then we're looking for one positive contribution to society through either charitable donations or impact on the environment. But also the second way that we look at ESG is that each of the analysts will go through the individual companies that we're buying and review them from an ethical, social, or from a governance perspective as well. This fund fits really well into a wider client portfolio as a kind of a part of the portfolio that gives you an insurance policy against other risks in the portfolio, particularly now as we move back away from 2020, where interest rates have risen up to higher levels. They now provide a good source of income for portfolios in a client's portfolio, and at the same time being hopefully less of a correlation with risk assets like equities.